Right, so I'm Torgny, and I run 3 bullion dealers, as you heard this morning, if you were awake already at the early time of 9 a.m. On the panel. I run 3 bullion dealers. I'm Swedish by origin, so I started my first bullion dealer in Sweden in 2008, which is Liberty Silver. LibertySilver.se is the brand. I have subsequently started in Estonia and about 2 years ago now in Singapore as well. But I would like to start with a cautionary warning because I excuse me. I have a bit of a scary background actually. I'm an economist. And I usually tell people if you get a chance to study economics, don't. Because it is scary, you know. We can just see on the CNBC and in the central banks and government what it has done to a lot of people. Because economics is mostly about professors peer reviewing each other's work, you know, having each other's backs, and they have a model, and then they take the model and they try to force it on the real world instead of modeling the real world the way it should be. So, you know, to me it's still surprising how common sense is so rare and even unacceptable in economics. And the takeaway from that is that if you're studying economics, you have to do it yourself. And that's what I try to do. I graduated now about 15 years ago, and you know, in the 3rd and 4th year during my master's degree in economics, we were just laughing at the models because they were so obscure and didn't have any connection whatsoever to the real world. So the takeaway is that you can learn a lot of things in school, but economics you have to learn yourself. And that's what I tried to do, and I studied the Austrian Economic School, and that led me to invest in mining shares first about 10 years ago. But then I found out that, you know, there's a lot of not only company risks, but there's a lot of risks, counterparty risks, investing just generally. You know, what if your stockbroker goes belly up, or what if you know, your bank goes belly up? And we have an unsustainable monetary system. We have a lot of debt, and I was also worried about the privacy in investing in paper assets, because of course if you hold paper assets, the bank and the government has access to your funds, and with that they can always confiscate it. It can either be outright, like it was last year in Cyprus, or it can be through ambiguous tax agents. So, you know, precious metals is a bit different because it's physical in nature, so it's not a financial asset. But today I would like to cover 3 different areas. So we'll start with gold trends. What's happening on the gold market? The new gold rush. How can I proclaim that there's a gold rush? Because the spot price of gold has, of course, been going down a lot. Then I will look into gold price suppression. Is there such a thing? What's happening on the marketplace? We're going to look at the physical market and the paper market and its differences. And I will conclude with international diversification for gold. How can you internationalize your gold to keep it outside the system, the financial system? And I will try to leave some room for discussion at the end. And if you have no questions, there's a cocktail party, so it's up to you. So gold trends. It has been becoming unfashionable in the West to hold gold. We can see that the ETFs have been losing a lot of their gold in the last year. The ETFs have been decreasing their holdings with about 880 tons in just a year. So they just hold about 2,000 tons now. So with it becoming unfashionable, how can I then proclaim that there's a new gold rush? Well, let's look at the gold market. The physical gold market stands at about 4,400 tons per year. This is the consumer demand for gold annually in the world. But let us put this into perspective. If we look at the stock market, what is the value of the stock markets around the world? Well, if we look at it, there's different figures, but if we look at it, it's at least $60 trillion value on the stock market. And the sovereign debt market, of course, we know the US debt is about $17 trillion, but totally globally it's about 70 to 75 trillions. So the gold market, with its $190 billion in physical demand each year, is a very small market comparatively. And gold at best covers 1 to 2% of all outstanding currency assets in the world, all derivatives in the world. So very small market. But the significant trend on the gold market that attracts very little media coverage but has huge implications in terms of a shift of wealth is the Chinese gold rush. We can see from this chart that the Chinese took delivery of no less than 2,200 tons of gold in 2013. And the red bars on the chart is the withdrawals on the Shanghai Gold Exchange. So this is all the withdrawals of gold in China, because all gold in China has to go through this exchange. And we can see the red bars are close to the yellow bars here in the last year. And the yellow bars are the world mining production, the total world mining production. So the Chinese demand is almost as high as the world mining production altogether. So it's a very tight market, and we can see that it has been increasing a lot. It doubled from 2012, and it has increased about fivefold in just 5 years. And we can also see the blue bars here, which is the COMEX withdrawals of gold, which has become a bit of a sideshow, actually, as the Chinese are taking over the demand of gold. And the question is, why do the Chinese demand all this gold? Well, whereas Westerners are shunning gold, you know, when it's underperforming, it doesn't pay any yield, doesn't have any interest. The Eastern gold mentality is much different, because the Easterners they are viewing gold as a long-term value attainment. They don't care too much about the spot price, because they put a mind value to gold which is much higher than the spot price. And they're saving in gold for generational wealth. It's much different from the Western culture. They want to hold it long term, and we can see in China that the government is even advertising on national TV, and they are encouraging people to hold gold. So they buy when it's cheap, and they're not interested in lending their savings as much as we are. I mean, Westerners are generally depositing money at the bank. They lend out the money to the bank and expect to get it back, which is not making sense, because they might get it back in the short term, but in a much diluted and inflated form. But if you're a Chinese saver, then you hold gold and you don't want to lend it because there's a risk you won't get it back. And this makes sense. And you know, the system is much different. So the commodity exchange in China, which is the Shanghai Gold Exchange, is actually functioning like a commodity exchange should be. You can take physical withdrawal, and it's easy to do so. COMEX here in the US, I've been trying to take delivery on COMEX actually in 2008, when we had a big shortage of silver. But it's very bureaucratic, it's time-consuming, and it's a lot of costs for it. So they're also setting up functioning commodity exchanges, and actually about 40% of all contracts in China goes to physical withdrawal on their commodity exchange. So with all this demand of gold, how can the market supply it? We saw from the last chart that the Chinese demand is almost as high as global production. Well, we have the ETF outflows. You know, the Westerners here in the US and us Europeans have been selling a lot of ETF gold in the last year. So the ETFs have lost about 880 tons. And what's happening is, when people are selling ETFs, the ETFs have to sell gold, and they have 400-ounce bars which are stored in vaults in London. And these bars are exported then from the UK to Switzerland, We know this because of official trade statistics. In the last year, UK exports of gold to Switzerland have increased tenfold. It's a big increase. So the Swiss refineries, because they're mostly Swiss refineries, are minting bars, smaller bars. It's 1 kilo gold bars and it's smaller gold bars. And they subsequently export it to China, sometimes through Hong Kong. And we can also see on the official trade statistics that the Swiss export of gold has actually increased sixfold to Hong Kong. So this is the trend that a lot of gold is flowing from the west to the east. And we can see this from this chart here. On the left-hand side, you have the Western consumption demand of gold, and the Eastern on the left-hand side, sorry, and the Western consumption demand on the right-hand side. So consumer demand of gold, you can see that the Eastern countries are much outpacing the Western countries. Of all consumption demand of gold, 85% comes from Eastern countries, and the biggest players are China, India, Turkey, Thailand, Vietnam, the Middle East. And this ratio is just increasing over time. So we have more and more demand in the Eastern countries. But if we look at the Western idea is to try to make currency returns from your gold. But this is not reflected in the Eastern countries. Because you do have ETFs in China as well. There's actually 4 licenses for ETFs in China. But they are largely unsuccessful. So the last 2 ETFs that were actually started in China, one has been suspended and one has been delayed actually, and they only raised funds that are equaling about 1 to 2 tons of gold. So the Chinese, they don't trust intermediaries. They want to hold physical gold. So this is my first trend here today, that there's a huge outflow of gold from the west to the east. But the outflow is from the ETFs, which are held mostly as speculation. It's bought and sold as paper gold. But if we look at the physical gold market, that is the demand for gold bars, gold coins, for jewelry, we can see that demand is actually up across the board. Even in Western economies, you have a US where demand is up 40% or so, and also in Germany. It's only in France that is actually lacking behind, which is like minus 50%. But we can see that, as speculative investors are selling, a lot of physical savers are buying. Because if you buy physical gold, you're not buying it for speculation. You're usually buying it for long-term savings. It's a savings instrument. And with this, the gold is changing hands from weak hands, from the speculators, to the strong holders, to the physical holders. So my second trend is that we have a shift from weak holders to strong holders, and a shift from ETF gold, paper gold, to physical gold. The third trend I want to cover is the central banks, because the central banks have actually increased their holdings of gold in the last 3 or 4 years. They are buying around 100 tons per quarter, and once again it's mostly the countries in Southeast Asia and the old the old Soviet republics buying gold. When Ron Paul actually a couple of years ago, I'm sure most of you have seen this clip on YouTube. Ron Paul asked Ben Bernanke what the reason is why the central banks are holding gold. And Ben Bernanke replied that it's because of tradition, which is a lousy answer, isn't it? I mean, why would you hold 8,000 plus tons if it's because of tradition? And the central banks are buying now. So the real reason, in my opinion, is that the central banks, they are not as stupid as we might think. They know that the current currency system will fail. And they're just holding, they're trying to prolong it as long as possible, because it's preferable to them. They can just print money, and it's good for policy, and it's good for elections. But the current monetary system, it's just the money today just have illusionary value. It's just a mass perception. And what I think is that the central banks, they will just let all these bankrupt deals that we have today work themselves out. And then they are actually accumulating gold to recapitalize the system when it ultimately crashes. Because what we can see here on the physical market is, of course, that there's such a high demand for physical gold, and it's unsustainable because we don't have enough, you know. And when the physical market runs out of gold, the paper market will crash, because no one's gonna want to hold paper when there's no availability to exchange that to physical gold. So I will talk more about that in a minute, but the central banks, I believe that the central banks actually understand this. And they will fare okay if this happens, because they both hold, of course, currency assets, but they also hold gold. So we will see a shift. If gold is revalued and currencies are becoming more and more worthless, we will see a shift in value from fiat assets, from currency assets to gold. And the ECB in Russia, they are already marking gold to market on their balance sheet. So they are updating the price of gold each and every quarter. But the exporters, the main exporters of the world, the Chinese, the Russians, they want to buy a lot of gold. And the Chinese holds US bonds for a value of about $1,300 billion. But they only have gold for about 1% of their total reserves. The reason why they're not buying more is that there's no gold available. And they want to accumulate, and they're buying bits and pieces, but it takes a lot of time, and they don't want to crash the market because they want to accumulate more. So it's not possible for the Chinese, or for anyone else for that matter, to buy a lot of gold, because it would crash the market, and we would have severe physical shortages. So the third major trend I'm covering here is that the central banks are accumulating a lot of gold. Yeah. So to summarize, the major trends on the gold market today is, first of all, that a lot of gold is flowing from the west to the east. And secondly, that we have weak hands selling and we have strong hands buying. We have the ETFs selling their gold, the speculative gold, but the strong hands, the physical savers, the hoarders, are buying. We see physical demand is going up a lot. And the third trend, central banks are purchasing. One other thing that I haven't covered is that the supply of gold is currently relatively stable. We have the supply is increasing a little bit year for year, but with the current spot price being so low, it's just a matter of time before a lot of mines will actually shut down, because it's not profitable to mine at the current prices for many of the mining companies. So price will have to go up, or we will see a decrease in supply very soon. And one other trend is also that recycling in the West is actually going down. So we can see then when gold was reaching its highs in 2012, that we had a lot of cash for gold companies popping up everywhere, and a lot of advertising for cash for gold. And we even had a episode on South Park for cash for gold. I know, who saw that episode on South Park? Yeah, I can highly recommend it, but it should tell you that the top for that market has been reached already. Because if it's covered on South Park, well, when we probably passed the peak already. But I now want to look into gold price suppression. So to understand the gold market, we really have to understand gold, and we have to understand why gold is money, and we have to understand the difference between the physical gold market and the paper gold market. So I won't go into detail why you should own gold, because I think there's a lot of prior knowledge in this room. But just tell you, with this phony recovery that we're seeing today, it's not a lot of people that are, if you just look out the window, you can see that there's an economic meltdown going on, and normal people are struggling, of course. We have record high deficits, we have record high debt, and we have underemployment. The system is just held together with more and more credit all the time. And like has been covered here before, the problem of too much debt and too much credit is trying to be solved with more credit and more debt. So the currency is systematically debased, and if you're holding currency, you will be the victim. We can see in the last 100 years that the currency has lost about 99% of its value. So we're on a path that is very dangerous and will lead to economic chaos in the end, because we have crony capitalism, really. We have capitalism that supports the elite, the banks, the central banks, where credit can be created out of thin air. Money is just created out of thin air. It's either the central bank buying treasuries, and when they buy the treasuries, the money is just created out of thin air. It doesn't exist. And there's inflation by creating credit in this fashion, because we have a wealth shift from the poor and the middle class to the wealthy. The people who gets the credit first, that is the central banks, the government, big corporations, military industrial complex, they can gain wealth by getting a lot of credit. But we get inflation from that, and that shifts the wealth from the poor and the middle class to the already wealthy. So printing worthless money, printing US dollars, that has never worked in the history of human mankind. And it won't work this time either. It will fail, it will collapse. We can just use common sense to see what's going on. If you trust governments and central banks, sure, but for those who don't, there's gold. And to understand gold, we have to understand that money, the role of money, what is the role of money? Money is supposed to be a store of value. That is one of the purposes of money. That's perhaps the most important one. And if we take, for example, let's assume a ship that sank 200 years ago, and you find some gold on that ship, and you find some currencies, you find some colonials, or you find some scrip money. And 200 years ago, the gold and the currency had the same value. But you find that today, and the divers are going down to the ship. So they find the gold, and they will be all happy because they know that the gold has retained its value. And then they find the paper money. Who cares? It doesn't have any value. It might have some collection value or some numismatic value, but it doesn't have any monetary value. And this is what's happening with paper currency. It doesn't keep its value over time, because gold is real payment. It's the ultimate debt extinguisher. When you pay in gold, you're debt-free. Whereas if you pay in currency, well, when I and you write a check, sure, we need to have coverage for that check. We need to have a deposit for a check. But when the government and the central bank is writing a check, they don't need to have any deposit to cover the check. So it's just, the money is just created out of thin air. It's just created by government decree. So it's legalized counterfeiting, basically. It's fraud. That's how money is created today. And even with, this thing here, the Federal Reserve notes, that's bad enough, but 93% or so of the US dollar today is not even existing in physical form. It's only 7% that exists in the form of bills and coins. The rest, 93%, is only electronic money, so it's only a figure on a computer. And if you have a figure on the computer, you're leaving someone else in control. You have the banks and the government, and who's sitting on the delete button for those 93%? It's politicians don't understand money. We can see that because we have debt bubbles, we have a business cycle, and we have disincentives to save today. No one is saving because you don't want to save. You have a lot of inflation, and you will be robbed as a saver if you save money today. And by that, there's no capital created, because where does capital come from? It's not credit. Capital comes from saving. You save money, and then you can invest it into entrepreneurship, setting up new companies, setting up new businesses. But that's not what's happening today. Today, all money comes from credit. So, as a society, we have been succumbed to the temptation of printing money. And usually when you're trying to get something out of nothing, it will fail, because it has never worked in history. And if you look at the characteristics of real money, what is the characteristics of real money? It's supposed to be durable, meaning that the money is not supposed to oxidize or corrode. Money shouldn't burn, and it should be possible to move. You know, if I have a piece of gold here, a 1 gram gold bar, quite small. So money should be possible to move. You can move both the gold bar and the dollar note, and it's really easy to move electronic money. But who's sitting on the delete button for the electronic money? That's an important point to think about. Divisibility. Divisibility is a good characteristic for money. It should be possible to divide money. Let me do an experiment here to show why gold is money and why paper money or electronic currency is not. So I have my 1 gram gold bar here. So it's a 1 gram Pamp Swiss gold bar, quite small, not as big as you see the gold bars on TV. So I'm going to do an experiment here. I'm going to divide this piece of 1 gram of gold into 2 equal or close to equal pieces. So let's do this. And I'm going to have a lottery later to see who wins the pieces of a gold bar. So gold is actually soft, so it can be split quite easily. So I'm now going to do my best to split this gold bar into 2 pieces. Let's see if I can do it. So gold is actually malleable as well, which means it can be stretched out very thinly without breaking. And that's what we can see here. I've made a lot of damage to it already, but it's still holding together even though it's soft. And that is one of the intrinsic characteristics of gold. It's strong, but it's soft. And it's also a great conductor. It's leading electricity and heat very well. So I'm now managed, and I have 2 pieces of a gold bar here. About 0.5 grams each. One piece is a bit larger, 0.6 grams. But I still have my gold. If I put it together, I still have 1 gram of gold, right? Whereas, if I do the same thing with a Federal Reserve note, I here have a $20 note. What if I split this into 2 pieces? What will I get? Let's try. And I was checking whether this is illegal or not. It should not be, but who knows. If NSA is listening, you know, yeah, well, here I am. So let's try. Will I get 2 pieces of $10 notes? 2 $10 notes? Well, no, I get 2 pieces of worthless paper. And that shows us how worthless our money is today, because it doesn't have any intrinsic value. Gold has its value because there's metallic characteristics to it. It's the best metal that exists. Gold is the best metal that is known to humans. It has high density, as I said. It is soft. It's malleable. It's a great conductor, and that's why it was used 6,000 years ago for money, and why it's still money today. So perhaps I should also let someone win this $10 note. We'll see. So now let's look at the paper gold market. We know that the physical gold market stands at about 4,400 tons per year. But how about the paper market, the market that is the most traded in gold? Well, the price on gold is set on the paper market. The biggest paper market in the world is the LBMA market, the London spot market. LBMA had a survey in 2011 where its clearing banks were reporting that 2,700 tons of gold, that is unallocated paper gold, is traded each day. And this was only 2/3 of the participating members being part of the survey. 2,700 tons each day. And we know that the physical gold market is 4,400 tons per year. And here we're not even looking into, COMEX and the other commodity exchanges. So anyone's guess whether this 2,700 tons traded each day is backed by physical gold? The size of the paper market is just ridiculous. But the important thing to remember is that the price of gold is set on this paper market with unallocated phony gold. So the question whether we have price manipulation, well, we might have manipulation on the paper market, but the whole marketplace is manipulated. It's the whole market. We have a whole market without any backing of gold. So, of course there's manipulation, because the marketplace itself is big hoax. It's just, paper gold. But the important takeaway is that the price of gold is set on the paper market, and that price is inherited to the physical market. So gold decreased, the price of gold decreased about 28% in 2013, whereas physical demand for gold, demand for real gold was significantly up last year. We had record high demand, in fact, and we had shortages. On a normal market, what happens if the demand is record high? If we have a sky high demand, of course the price is going up. What's happening on this market? Well, the price is going down because the price is set on the paper market, and we had a lot of sellers on the paper market. So we can see that the confidence was actually lost for the paper market, and the paper market is losing a lot of trust. So what's happening is that the trust is lost on the paper market, and people are instead buying physical gold. We're starting to have shortages, but the price is going down. So higher demand for real physical gold is making the price go down. So how upside down is this world, It's, just the same as the stock market. If we have bad economic data, the stock market will go up because we will have more QE. So that's, wonderful world. But ultimately, the marketplace will take over. The marketplace will rule. Because when we have shortages of physical metal, the paper market will eventually crash. And we could see this in the beginning of 70s, 1971, with the gold window being closed by President Nixon. Same thing today. The demand in 71, when gold was fixed to $75 per ounce, was really high. The French and other countries wanted to take physical delivery of gold. And we have the same thing today. There's a lot of people, especially in the Eastern countries, the Chinese, taking physical delivery of gold. But if we think about it, the important thing since 1971 has been that gold has actually had backing. Well, gold has been backstopping US dollar, all the US dollars all these years, actually, because if you couldn't buy gold for US dollars, no one would be interested in the US dollars. So gold has been backstopping the US dollar even though we don't have any formal backing. Because the Chinese and the oil exporters, the Saudi Arabians and the Middle Easterners, they wouldn't be interested in holding US dollars if they couldn't buy gold for it. So when the US dollar can no longer buy gold, when the paper market crashes, then we're going to be very close to hyperinflation. And I think, what did I do now? Yeah. So what you got to look for is to see when the US dollar and when currencies are starting to destruct, it's important to look for two things. The first thing is to look for physical shortages on the physical market of gold. Because when we have shortages, the price for physical gold will decouple, will divert from the paper gold. And if the US dollar can no longer buy gold, then the US dollar is in a lot of trouble. And the second thing is to look at the demand for saving US dollars. This is misunderstood by a lot of people. You see that we have a lot of supply of dollars. We have a QE. We have a government and the central banks. They're bailing out companies. They're printing money to buy debt, their own debt here in the US. But the supply is not the most important thing, because you have demand for money. You know, people want to save more, a little bit more, because it's bad economic times. So the supply is just, tug of war, basically. We have more demand, so they let more money be printed. But that's not the most important thing, because we don't see much price inflation today, actually. Well, there is a lot of price inflation. There's a couple of percent, and all the essentials is going up in price. But it's not hyperinflating. But the important thing is to see when the demand for holding savings is going down. Because when people no longer trust the US dollar, when there's no longer any confidence in the US dollar as reserve currency, then we're coming into trouble. Because we can look at many cases throughout history. Zimbabwe, a couple of years ago. What's happening? Well, you get paid twice a day, and you run out to spend your Zimbabwe dollars before they are becoming worthless. So what is important to look for is when people no longer want to hold the US dollar no more, when people are, spending them to get some purchasing power out of it before it's too late. So physical shortage of gold and demand, which is called on economist language money velocity, when the money velocity is increasing, then we're in a lot of trouble. And, this wouldn't need to happen, actually, if the, Federal Reserve, the central banks, and the government would just let a recession take place, a depression take place, to cleanse out all the misallocations and all the debt. There wouldn't need to be any currency destruction, but that is not likely to happen, as we see. We're basically in the middle of an economic meltdown, and we have new highs on the stock market every day. So with that, I tend to think that it will be more likely with a currency crash instead of an asset crash. So the question then is, what will the price of gold be if the currency is destructing? Well, I think it's a flawed question, because the price of gold has nothing to do with gold. It has everything to do with this. The worthless pieces of paper. So the question is more, how worthless will the pieces of paper be, rather than what will the price of gold be? Because price of gold is really the wrong terminology, in my opinion. Gold is the stable money here. Gold is the superior measuring stick. We can see this throughout history. Thousands of years, gold has maintained its value much better than any paper currency that has been tried. So what we should do, and what we're doing at BullionStar, is that we should measure everything else in terms of gold. We shouldn't measure prices in US dollars, because we know that the US dollar has lost 99% of its purchasing value in just 100 years. So for example, if we look at the price of oil, we know that the price of oil has, it's very high. It's been going up throughout the decades. But if we look at the price of gold in terms of gold, we can see that the price of oil is actually very stable from the 40s to today, 70 years. So gold is a much better measuring stick. It's much more stable over time. And so the conclusion is basically, when the price for the physical market is decoupling from a paper market, which is inevitable, and we have a strong trend in this direction. As I said, we have a overwhelming demand from China. And when the paper gold is becoming worthless, then physical gold will once again be, you know, a proxy of value and money in the real sense. All right, so the reason why we're here, international diversification. Let's now look into, if you hold gold or if you want to buy gold, how should you do it and where should you buy it? Well, I would argue that it's always good to hold some in your own possession. Just like all other assets, diversification is important. And I've had since I started my first bullion dealership in 2008, I've heard so many suggestions of how you can, you know, protect and hide your gold. You know, everything from baking it into minced meat and keep it in the freezer until then you have to tell your wife or husband so they don't clean the freezer. But you know, to hide it in furnitures, to dig it down to the ground. So your imagination is the best way to you know, use when it comes to your own possession. But for the rest of it, I would argue that you have to diversify your risks, because what we see today with the fragile economies and the government's privacy intrusions and the confiscations of assets, you can almost expect to lose some of your assets due to what's happening. So it's important to diversify your risk and spread the storage of gold. Why diversify internationally? Well, this has been covered well over the last days here, so I won't go into details. But the reason is, of course, that the reason to diversify is that you should keep your gold in a way that the crooks can't steal it. And the crooks is the government in this case, and the elite banksters. So, yeah, we can see that we're on the verge of capital controls already. We had JP Morgan sending a mail to their business customers saying that they limit the international wire transfers. And, you know, confiscation risks, well, it doesn't have to be outright confiscation. Of course, tax law is very ambiguously applied by tax agents today. But it can also be outright confiscation, like in the 30s. It has happened before. The likelihood of it happening again might be low, you think, but what about people in the 20s? Just before we had gold confiscation and gold outlawed in the US, no one could ever think in the roaring 20s that gold was going to be outlawed. That would have been absurd. You know, you would have been laughed at if you said that. So, yeah, it seems unlikely, but it has happened before. If you store your gold abroad, or some of it abroad, you're much safer from frivolous litigation. If the government doesn't know that your gold is existing, it's difficult for them to confiscate it. And then you have, of course, if the currency is collapsing, you might hold some gold in your safe deposit box. And theoretically, your gold in the safe deposit box is, you know, your gold. It's not part of a bank's balance sheet. But what if a bank simply closes? You know, if we have a bank run, if we have a bank holiday, there's going to be thousands of people outside the bank. So you can't access your safe deposit box, and it doesn't help much whether it's the bank's assets or not. I mean, you can't access it, and then it's of no use. And of course, we have the reporting requirements. Today, both bullion dealers and individuals have to report certain types of gold. I mean, if you sell it, you have to report it. Bullion dealers in the US have to report certain types of purchases of gold and silver. And there's a lot of limitation when it comes to transacting money. Anonymous transactions are basically not existing anymore, and there's cash limitations, and it's difficult to buy and hold gold anonymously in the Western economies. And storing gold overseas is an insurance policy. It's an insurance against confiscation, but it's also an insurance against the collapsing monetary system. Yeah, so we have reporting requirements here for some types and volumes of gold and silver, and there's a reporting requirement, or there's a requirement for US dealers to collect and copy driver license numbers, and there's always stiff penalties if you don't abide. So one one thing you can do is to diversify and buy and store some of your gold abroad in other countries. And I believe that Singapore is the best country in the world to do so. And that is the sole reason why I've set up a bullion dealership in Singapore and moved not only myself, but my family and my life. So what I've tried to do in Singapore is to cater to just this, what we're talking about here, you know, to cater to international diversification of your gold assets. Why is Singapore so good to hold gold? Well, Singapore has no taxes for bullion. There's no sales tax, there's no capital gains tax, there's no dividend tax, there's no tax whatsoever. And with that, the government doesn't care about any reporting requirements. We as a bullion dealer don't have to report anything to anyone. So, because the government is not taxing it, so why would we need to report it? And with that, there's no documentation requirements. So when you open an account with us in Singapore, you don't have to send any documents whatsoever. You can open an account in less than 1 minute. You know, it's your name and your address, because there's no reporting requirements. So, and as I talked about this morning, Singapore is one of the safest countries in the world. You can easily cash and carry in Singapore. There's no cash limitations, by the way. You can purchase gold any amount with cash. And it's perfectly normal, because it's common sense. If you purchase gold and you purchase it from us, well, don't trust us. So come to us and pay cash, because then you will get your gold at the same time. There's no counterparty risk if you would do that. So it makes sense. So there's no restrictions on cash payments, and it's very, very safe. You can, you know, buy your gold and you can carry it out, and violent crimes in Singapore is almost unheard of. One important thing is that the Singaporean government, well, they're not much involved, but the trade agency in Singapore is much, you know, facilitating for us. We can ask the trade agency, the government trade agency in Singapore, questions. You know, where can I find a good printing company? Where can I find this and that? And they will respond in a couple of minutes, and they try to help us. They even going abroad to. I know they were in Thailand trying to pursue Thai precious metals companies to establish in Singapore. So this is unique, you know. What other government would do that? What other government is trying to set up a gold trading hub in the world? So they want, and they're competing with Hong Kong to some extent. So they always want to beat Hong Kong, and yeah, very much facilitating for us. The story is the first time I was in Singapore to research what opportunities we had there. I was there with Mr. Anderson, who's in the back there as well, who's my partner in BullionStar. So we went to actually a storage facility in Singapore. We're discussing business opportunities, and the guy at the storage facility is saying, "Why don't you contact the government to discuss with them?" And I was, "Can you do that? You know, I'm from Sweden. You know, if you can't contact the government. How would that work? You know, if you try to send an email to a tax agency in Sweden, they reply, you know, 4 weeks later, and, you know, why don't we just audit you when we're talking to you already?" So it's, you know, it's hopeless, you know, bureaucracy. So I sent this guy an email at the trade agency, the government trade agency, and he replied in 2 minutes saying, "You're welcome tomorrow morning." And I was stunned, you know. So then we're sitting there next morning, and he's coming up with all sorts of ideas. Why don't you do like this? Why don't you, you know, sell gold and you have a safe deposit box, and then it can be, you know, bought anonymously to a safe deposit box? And this is the government. It's crazy. So we were overwhelmed, and we set up BullionStar because it was just such a good match. And Singapore also have very strong property ownership rights. Property ownership is well protected. So what do we do in Singapore? Well, BullionStar offers physical metal. It's only physical metal, no paper promises, no paper gold, no ETFs. What we do is that if you buy from us, you can buy segregated, specific gold. You can buy a specific 1 ounce gold bar, and you can have us store it in Singapore. What we do is that we take that specific gold bar, we package it in a tamper-evident bag. So we have a serial number of a bag, we have a serial number of a gold bar. We take a picture, we upload it to your account, and you can access your account 24/7. You can buy, sell, or request withdrawal of your physical gold 24/7 with us. And arguably, we have one of the best user interfaces to do that of any precious metals dealers. It's similar to a stockbroker account. You can request withdrawal, physical withdrawal, anytime. So we can send pretty much worldwide. We can send to the US, or you can come to Singapore. You can come and withdraw your physical metal anytime. You can come and inspect it anytime. And where we stand out is that even though we have this solution, we are very competitive when it comes to pricing. Our product pricing is just as good as it is in the US. I mean, please feel free to compare our pricing. On a 1 ounce gold bar, we charge about 2% and up 2 to 3% premium of a physical 1 ounce gold bar. And storage currently is free. This is worldwide unique. We don't actually charge for physical storage. It's segregated physical storage in Singapore. And we keep it free, and we will keep it free until 2016. Because what we're doing now is that we are internalizing the storage. So we are building our own vault. So the gold will be stored in our vault. It's currently stored with a vault partner, which is also in Singapore, which we have a very good relation with. But we're internalizing it. So it will be stored in our own vault. And with that, you will be able to come and collect your gold in less than 10 minutes without any prior, without having to report to us before you're coming. And already now you can come to Singapore and take collection of your gold, but you have to tell us a day in advance so we can facilitate for it. But with us opening a vault of our own, you will be able to come and just collect your gold on the spot. And there's no red tape, as I said, in Singapore. You can set up an account with us in less than 1 minute. Literally, we just need your name and your address, and that's all. And then you can start to purchase gold from us. And we have a one-page checkout. It takes a couple of seconds to place an order. And we accept orders 24/7. You can trade from your account, and you can follow your holdings real-time online anytime. So it's very straightforward. It's very simple, and not a lot of red tape. And people are normally surprised. It's been going so far, so people even react with suspicion. How can I open an account so easily? Because we've all been through how much paperwork and how difficult it is to open accounts with a bank or a stockbroker. But what we are doing, and the reason why I have relocated to Singapore, is to keep it simple. Open an account, buy and sell gold, hold gold. It's very simple. So it's the way it should be, really. And no reporting requirements, of course. We don't have to report anything to anyone. And Singapore is still, it's not like Belize or the Seychelles. It's an important country. So Singapore enjoys very good relation with both the US and the EU, which is a good thing because the Singaporeans are good diplomats. And Singapore is too important. The banking industry is huge and the shipping industry is huge. So no one would ever do anything, about this. And that is one of the advantages of being in Singapore. Even if, you want to have a bank account in Singapore to trade with us, that is, also a good thing because the banks are quite strong comparatively in Singapore. Of course, you don't want to hold any currency in the longer run at the banks, but the banks in Singapore have much better capital reserves than other banks. It's 30% plus from most of the local Singapore banks. So Singapore is a very, very strong country, and holding gold in Singapore is, quite frankly, the best place in the world to hold your gold. So that concludes my presentation, and we also have some brochures here if you want more information. And I'm going to be here for the cocktails today, of course, and you can contact me. I'm going to be around in Vegas for a couple of more days if you want to have a private discussion or if you want to have a meeting. So thank you very much.